Hello and welcome to another video on my YouTube channel. My name is Joris and today I'm going to go on with my video series about investing in emergent markets with European ETFs. And in this final part, the fourth part, I'm going to talk about the ETFs that invest their money towards the small caps from the emergent markets. So the emergent markets, I'm going to go really quickly in this video, so I'm not going to discuss everything what is on this slide, but the most important thing is that there are more than 50 countries that can be called emergent markets. And in this series, I'm talking about ETFs that invest globally into emerging markets, so not specifically into China or in India or in Indonesia or Brazil. It's globally. And then I already discussed 21, actually 22 ETFs. So you will be seeing an ETF that I already mentioned in one of the previous videos. So in this video, there is only one extra ETF that you haven't seen yet from the 23 that I found so far. But if you know of any other European-based ETF that invest in emergent markets, please let me know in the comments down below. I'm always happy to learn from you new ETFs, and then I can include those into my further videos that I'm going to make. And the MSCI index is the most used index for the emergent markets, so tracking the emergent markets. And I discussed the ETFs that deal with the MSCI index in part 1 of this series, so you can check that one out after you watch this video. But in fact, no, you should stop and go watch that one first, because at the end of this video I'm going to give a complete overview of the ETFs that follow diverse indexes as well and invest in, yeah, like in this video, small caps. And I'm going to give the performance, the dividend yield, and the total expense ratio in a table overview. And at the end of this video, I'm going to give an overview of all the ETFs that I discussed. Also the best ETFs that I discussed in the previous videos as well, together with the ETFs that I discuss in this video. Once again, so all the dividends that you see here are in US dollar. The ETFs that come from the 6 that are noted there in Swiss francs, I also present here with Swiss franc. When they are available in US dollar, I give them in US dollar. And for the London Stock Exchange ETFs, there it's also in US dollar that I took the currency. And all the performances, I took them also all in US dollar. And when they were only available in Swiss francs from the 6, then I converted them with just ETF, because there you can select British pounds, Swiss francs, euro, or US dollar to watch at the performance of the ETFs. I always took US dollar and wrote down the performances of the ETFs like that. So the first one is the IEMS from iShares with a total expense ratio of 0.74%. It's unbelievable. It's the best ETF to follow the emerging markets with a small cap. There are only two. This one, I haven't mentioned it before. The next one I have already mentioned. But here, actually, I don't understand why it's that high. 0.74%. It's enormous. Okay, you get 2010 companies, and there is already 450 million invested in this ETF, and you get a hell of a performance compared to all the other ETFs that I discussed in this series. Since its inception, it started just yeah, at more or less at the bottom of the crash of 2000, the financial crisis of 2008, 2009. So it's up 350% almost since its inception. But you know, that's not that important, of course, because when you start, compared to the crashes that we have in the previous videos, you heard me talking about COVID sometimes. Yeah, it plays a role. So here as well, 3-year performance, it's only 10.11% compared to last year 18.30. So yeah, here COVID is included. Here COVID is past. You don't have an influence anymore. And 5-year performance 50.62. Yeah, COVID is in there as well. So the MSCI Emergent Markets Index only went up 10% in the past 5 years. This one performs 5 times as good. But is it normal that the total expense ratio is 0.74% for BlackRock for this ETF? I really don't know. Okay, it's small caps, so it can play a role that the price is higher than, because you need to research more, you need to buy all those little more little companies but still 0.74% for an ETF, that's really high. It distributes 2 dividends per year in January and July, and the dividend yield is 1.77%. And here you can see that the dividend for January in 2024 is considerably lower than the one that you would have received in January of 2023. So once again, we have to wait and see what will be the distribution in July for 2024 to really know whether or not they will be able to maintain the dividend yield. But in the long term, actually, it's more the performance here that plays a matter. You don't invest in this one for the dividend. That's in fact for the next one. So there you have the WisdomTree Emergent Markets Small Cap Dividend. You know that was the best dividend ETF that I discussed for the emergent market ETFs. So in the second video of this series, that was the total expense ratio is 0.54%. So again, rather high, but not as high as the one from BlackRock. It invests in 895 companies, and it invested in it has 30 million invested in it, so way less than the previous one. And okay, the performance, it's not that good, but still for the past 3 years it performed a little bit better, and for the past year and the past 5 years it performed worse. So yeah, 50% for the iShares one compared to the 38% for this one. Yeah, some people they will pick the other one for sure. And as you know, the total expense ratio, the that goes off of the price of the ETF as well, so you don't even see it in the performance. So you can see it in the dividend yield that you receive. So here the dividend yield is a bit higher because the money that they receive, they eat away the from the dividends that they receive to in order to pay for their total expense ratio. They it's good when it's lower, of course, than the dividend yield, because otherwise they need to sell a little bit of stock of or withhold a bit of the money that flows in into the ETF to pay for their expenses. But yeah, total expense ratio is rather high for the small cap ETFs that I'm discussing in this video. So here the same remark as in the previous one, but here the dividend you received in January of this year, it's only a little bit smaller than the dividend that you would have received in 2023. So if this goes up a little bit in July this year, then they are definitely going to be able to maintain the dividend yield. And in that regard, I'm actually more of a fan of the DGSE ETF. But if you look at it, the IEMS from iShares is definitely the best performer. So the DGSE gives a higher dividend, but overall, this is the overall table of all the actually the overview for the complete videos that I made in this series. And then you see that the iShares one from IEMS is the best performing one. It's way up there. Then you have the DGSE, so that's small cap and dividend, and it's definitely okay, that one. And then you go down to the dividend DEM, and that's also in Swiss francs. Then you have the LDME with dividend and ESG. So if you want to invest in ESG, you are also best off with the one that gives dividend. So that's actually a bit strange that you have three of dividends, and one of them is the best for the ESG ETFs, and then you have, yeah, you only have two small caps ETFs. So I'm a bit yeah, how do you say it, prejudiced towards dividend ETFs. But the DGSE one is definitely up there. It's too bad that it's only available in Swiss francs and not in US dollar. Otherwise, I would definitely go for the DGSE one to invest our US dollars that we receive as dividends from our different ETFs that we invest in. But yeah, now I have the difficult task to go and talk to my wife and discuss whether or not we are truly going to invest in the one with the highest total expense ratio from iShares. Because when you look at the numbers, it's definitely the best performing one. So yeah, from the ones that you can invest US dollars into and give US dollars that are noted on the six, we only have two. So you have the IEEM from iShares and you have the IEMS from iShares. And yeah, the total expense ratio, it's way up there. And I know I shouldn't look at it because the performance is really great. But on the other hand, yeah, it's quite frustrating that iShares is, yeah, stretching the mark and really being a bit greedy, I think. So 0.74%, yeah. When they can do it here 0.80%, why they can't do it here with 0.35 or something like that? I hope that they lowered that one for sure. And I will keep you updated whether or not my wife and I decide on YEMS or YEEM, or even the HSBC one from the MSCI index, because there the US dollar amount was only 10 to buy a share of that ETF, compared to 40 and a bit dollars to buy the IEEM ETF from iShares. So it's still open for debate in which ETF we are going to invest into emergent markets. This one is a little bit shorter. I like shorter videos, but sometimes with all those ETFs that I need to discuss, it's a little bit hard to keep them short. So thank you for watching. Oh no, yeah, I made this graph as well. Okay, this one isn't in it, so the LDME ETF, you can't find it in the graph because there was only a performance of 1 year. And if I took that one in it, I couldn't show the performance of 3 years for all the other ones. So here you can see the performance of 7 of them, 7 of the 8 that I mentioned in the previous table. So as you can see, you have the iShares MSCI Emergent Markets Small Cap. That one is here, the orange one. Then you have for the past 3 years. So for 5 years, it would be the highest one and the best performing one. And then you have the WisdomTree Emergent Market Small Cap Dividend UCITS ETF and the WisdomTree Emergent Market Equity Income. So that were the 2 best dividend ETFs that I discussed for this series. And over the 3 years, they are performing, the past 3 years, they are performing the best. And then you have here the 4 that are bangling at the end and are actually, yeah, quite negative. So, yeah. Sometimes it's surprising to see a graph like that, and when you were convinced that you should invest into the iShares MSCI EM UCITS ETF, but actually it comes out on the bottom of the list. So yeah, it's going to be probably this one where my wife and I are going to invest into, but nothing is written in stone or rock right just yet. But with that being said, thank you for watching this video. Please consider subscribing and hitting that like button as well. It helps out the channel enormously. Thank you for watching and see you on the next one. Bye.